One fund, on point for today, the expert to talk about it. This is the ETF of the week. Welcome to the ETF of the week, where we get the latest take from Todd Rosenbluth, the head of research at VettaFi. And if you check out VettaFi.com, you will find all the tools you need to be a savvier, smarter ETF investor and to get more details on the new, newsworthy, trending, and timely ETFs that we talk about here. Todd Rosenbluth, it's great to chat with you again.
It's great to be back with you, Chuck.
Your ETF of the week is
the SPDR S&P Regional Bank ETF, ticker KRE.
Money in the bank.
Yeah, money in the bank, in this case, regional banks. It is the SPDR S&P Regional Banking ETF. Now, I've got a lot of questions about the timing of this pick because we always say, trending and timely picks. Well, basically, as of election day, this fund was trading like about 8% below where it's trading as you and I record this. So is this about the move it made post-election or about the move you expect it to make well post-election?
So it's, we think regional banking has been in favor. This ETF has been very popular since the election. The Trump administration and Republicans are more likely to be supportive of deregulation in the financial services industry. That's a good thing for regional banks that are a highly regulated group of companies. The election is likely to be a positive in terms of if you want your taxes and corporate taxes to be lower, and banks, of course, pay taxes. Smaller companies tend to be disproportionately impacted by taxes from their profitability, their overall profitability standpoint. They don't have that same scale. And so this ETF is equally weighted and has more small cap exposure than some of its financial services peers. So we think the trend is going to be favorable. We think investors certainly think it's going to be favorable. And we wanted to dive into what you get and why it may be under consideration.
I want to point out that of late, you have been talking a lot about active ETFs. But as you point out, this is equally weighted. So why not a more active methodology in the regional banking space?
So firstly, I guess there really isn't in the ETF space. There are a couple of active, broader financial services ETF. Davis comes to mind as having one of them. But what this ETF is have exposure to many U.S. regional banks, large, medium, and small in size. They treat them equally. So they all are roughly 1%, give or take, of the overall portfolio until it gets rebalanced, and then it comes back to that 1% level. It'll deviate a little bit from that. This is just a simple way. If you have exposure to the financial services sector through an ETF like XLF, which is also a State Street ETF, it's a financial select sector SPDR ETF. This can bolt on nicely because regional banks are part of that. If you have no exposure to the sector other than through a broadly diversified S&P 500 ETF, this can be a nice risk on tilt. Regional banks can make sense, and an index-based approach can work very well for many investors.
You point out a risk on tilt when it comes to this. How much of a portfolio, and I recognize you don't make specific recommendations, but if somebody's looking to make a tilt, you put a pittance in, you don't really get much lean. So how much of a portfolio or how much of somebody's equity portion do you look at something like this to get that tilt that you want?
So I'm a big believer. I think listeners and watchers have gotten the sense in a broadly diversified portfolio using broadly diversified ETFs as a core, and then adding some ETFs or using some ETFs to be able to complement that. So let's break down some of the numbers here. I didn't cross-check this, but financials as a sector is a low teens, I believe, percentage of the S&P 500. So it's not as big as information technology. It's certainly not as small as utilities or real estate. It's somewhere in the middle. Banks are roughly a third, I believe, maybe a little bit less than that, maybe 30% of the financial sector. It's not the largest. largest of those industry groups, and regional banks are even smaller. So you have some exposure to regional banks today. That's a long way of saying it. If you believe that regional banks are going to be an outperformer, you want to have some meaningful exposure to that, to the industry, and maybe pick a couple of industries that you think, or a couple of sectors that you think can outperform the broader market, whether it's an industry ETF like this regional banking ETF, or it's more thematic in nature. That's a great way to complement an existing broadly diversified, perhaps S&P 500 based strategy.
In terms of this being a risk on tilt, what would make you at some point go risk off? Will it be that some other sector or some other weighted part of the S&P has heated up and you want to lean in that direction? Or will there be a sign? Because it's easy to buy something and say, yeah, this is a good time to add it. But if you're going to say it's a good time to add it, you kind of also want to have an understanding going in of what would be a good time to subtract it.
I think the case for regional banks is quite strong in the initial months of the Republican administration and Republicans perhaps having control of both houses of Congress to enact the tax policy that they are likely to put forward, that I think they're likely to put forward based on what their campaigns have said. If we don't see taxes become in focus, and we don't see deregulation become in focus, then this industry doesn't have the same doesn't have the same investment merit. And so I would probably be watching this industry in the initial months. Obviously, Trump doesn't become president on January 1st. It's a little bit after that. I think the initial months of 2025 to see if this industry group is actually doing what you want it to do, and is it benefiting from stronger fundamentals. And if that's not the case, then if you decided to take this risk on, you might want to take it off and look elsewhere. Again, this is an idea. We do this on a weekly basis. There's no way people should own 50 different ETFs that we talk about within a given year. This is an idea for people to consider, and where the money has already started to flow in, we wanted to dive in a little more closely.
And that's the other side. The money has started to flow in, but you think this is worth that look right now. Again, you're kind of saying, let's see how it plays out when we get the administration change. But prior to the change in administration, et cetera, given the way the market has reacted to the election, this is something you want that risk on tilt now.
Right. The market, I mean, the stock market and thus the ETFs that are tied to the stock market are forward-looking in nature. We're not buying what is likely to do well just from a profitability standpoint in November. The market looks at least 6 months forward. ETF investors should look at 6 months forward. Let's see where we are in 3 to 6 months. And then I may be happy to be back here and come back with a different SPDR S&P industry group that we think is likely to do better than the regional banks. But right now, the regional banking ETF tied to State Street is in focus right now.
And that's why the KRE, the SPDR S&P Regional Banking ETF, is the ETF of the week from Todd Rosenbluth at VettaFi. Todd, great stuff. We'll see you again next week.
It's great to be back with you, Chuck.
The ETF of the week is a joint production of VettaFi and Moneylife with Chuck Jaffe. And yes, I am Chuck Jaffe. You can learn all about my hour-long weekday show by going to MoneyLifeShow.com or by searching for it wherever you find great podcasts. And if you're searching for great information on exchange-traded funds, well, you want to look no further than VettaFi.com, where they have all the tools you need to make yourself a better investor and a more informed investor in ETFs. They're on X at Vetta_Fi, and Todd Rosenbluth, the head of research at VettaFi, my guest here on ETF of the week, he's on X too. He is at Todd Rosenbluth. The ETF of the week is here for you every Thursday. Follow along on your favorite podcast app to make sure you don't miss any of our episodes, and we'll introduce you to another great ETF next week. Until then, happy investing, everybody.